Welcome to another Capital Taxes Incorporated production. How to file taxes for capital gains from stocks, a tax guide for investors. Investing in stocks can be an excellent way to grow your wealth. However, it's important to understand the tax implications of selling stocks and realizing capital gains. In this comprehensive tax guide, we will explain how to file taxes for capital gains from stocks. Whether you're a beginner investor or have been in the market for a while, this guide will equip you with the knowledge needed to navigate the tax requirements related to capital gains from stocks. What are capital gains? Capital gains are the profits you make when selling stocks or other investments at a higher price than what you initially paid for them. These gains are subject to taxation by the Internal Revenue Service (IRS) and must be reported on your tax return. Types of capital gains. There are two types of capital gains, short-term and long-term. Short-term capital gains occur when you sell stocks that you have held for 1 year or less. Long-term capital gains, on the other hand, result from the sale of stocks held for more than 1 year. The distinction between short-term and long-term gains is important because they are taxed differently. Holding periods and tax rates. The duration you hold your stocks before selling them determines the applicable tax rate for your capital gains. Short-term capital gains are taxed at your ordinary income tax rate, which is typically higher than the tax rate for long-term capital gains. Long-term capital gains are subject to preferential tax rates based on your income level and filing status. Reporting capital gains on your tax return. When filing your tax return, you must accurately report your capital gains and calculate the taxes owed. Use Form 8949 to report each sale of stocks, providing details such as the date acquired, date sold, sales proceeds, and cost basis. Transfer the totals from Form 8949 to Schedule D and include the final capital gains or losses on your Form 1040. Sample scenario. To better understand how to file taxes for capital gains from stocks, let's consider a real-life scenario. Meet Ben, a high school graduate who invested in stocks. In 2022, he purchased 100 shares of XYZ company for $10 per share, incurring a total cost of $1,000, excluding fees. In 2023, Ben sold all his shares for $15 per share, resulting in proceeds of $1,500. To calculate his capital gains, Ben subtracts his cost basis, $1,000, from the sales proceeds, $1,500. The resulting capital gain is $500. Since Ben held the stocks for more than 1 year, the gain qualifies as a long-term capital gain. He consults the current tax rate tables and determines his tax rate based on his income and filing status. Ben accurately reports his capital gains on Form 8949, transferring the information to Schedule D and including the final totals on his Form 1040 when filing his tax return. Frequently asked questions. Do I have to pay taxes on unrealized capital gains? No, taxes on capital gains are only due when you sell your stocks and realize the gains. Unrealized capital gains, which are the paper profits you have on stocks you still hold, are not subject to taxation. Are there any deductions or exemptions available for capital gains from stocks? While there are no specific deductions or exemptions solely for capital gains from stocks, you may be able to offset your gains with capital losses from other investments. Additionally, certain investment-related expenses, such as brokerage fees, may be deductible. What if I sell stocks at a loss? Do I still need to report it on my tax return? Yes, it's important to report the sale of stocks even if you incurred a loss. Capital losses can be used to offset capital gains, reducing your overall tax liability. If your losses exceed your gains, you can use the excess losses to offset other types of income, such as ordinary income, up to certain limits. Filing taxes for capital gains from stocks may initially seem complex, but with a solid understanding of the key concepts and requirements, you can confidently navigate the process. By staying informed and fulfilling your tax obligations, you can effectively manage your tax liability when it comes to capital gains from stocks. That's all for today's topic. Note, this video is intended for informational purposes only and does not constitute professional tax or legal advice. Consult a qualified tax professional or attorney for specific guidance tailored to your situation. This video is brought to you by Capital Taxes Incorporated. Thank you for watching, and see you in the next video.